Monday, June 12th, 9:15 a.m. We're getting all set up here for this trade along. This is a daily opportunity. eminitradealong.com. Just go to eminitradealong.com. Drop yourself in live into the Zoom. Be part of it on a daily basis. It is a guest to fee service, so don't be surprised. It's usually $400 a month. Right now, it's on for $150. Come in, click the link, spend some time with us as a guest. We're looking to do 2, 3, 4, maybe 5 trades based on a price action trading methodology. We're looking to get you in and out with some money in your pocket for today. Come in again and do it tomorrow. You know, trading shouldn't be rocket science. You'll notice the charts here are pretty simply represented. We have charts for you if you would like. We use Trade Navigator for a platform/charting package. We can teach you how to trade better from the beginning, the middle, the end of your trading career. Beginning, we can get you set up with charts. Make sure you're set up. If you're interested in trading somebody else's money, we can help you in that regard also. We work with Top Step. Top Step is an opportunity to be able to get set up with your own trading platform within Top Step. We would encourage you to pick Trade Navigator as the opportunity based on the Top Step relationship. Then we can help you and work with you, mentor you, and help you get on the right side of the trade. We're doing it every day. We're looking to pick up a couple $100 a day and go from there. We're looking to help you pick the trade so you don't have the losses that a lot of people are encouraging, or limit those losses. We got a general 2-point stop in our trades. We're looking for a minimum trading profit of 2 points plus, which is nice bang for you. Do that a couple times in the morning session. Discipline, bank it, come back tomorrow and do it again. Saul's here to help you no matter what the stage is of your trading. If you feel like you can get more out of your trading, ask him. If you are new to trading and you want to develop a discipline for your trading, Saul can help you with that. Take a coaching class with him. He'll review where you are, shed or help you shed some of the items that are holding you back in your trading. And I can clue into one of them is just strip your screen of everything and look at what Saul has presented here and look to utilize that as your opportunity so that you're not bogged down by so many things to mentalize on that you lose track of where the money is and what the object here is. I believe trading can be taught. It also can be honed, focused, and create an opportunity for you as a trader to do your 2, 3, 4, 5 trades. If you get done in 2 trades, if you finish for the day, all the better. Make a couple hundred. If you get consistent based on your couple hundred, you can raise your contract size. In other words, add contracts to your discipline. And then now you're chipping off more money. And then that's the goal. Home runs, the idea of chipping around 2 points plus, I think, is a dream boat because the market generally gives you, even on a quiet day, the opportunity to chip off 2 points. The plus is there if appropriate. The plus is there for when you learn, let's say, from Saul, how to do multiple contracts and how to manage those contracts. So this is an all-inclusive trade-along opportunity for you, focused on a very good trading instrument, in our humble opinion, the S&P 500 E-mini. Make money on the upside and the downside. In other words, if the market is going down for a period of time, you can capitalize on that. The market is going up for a period of time, you can capitalize on that. And then you can say sayonara to your, or bye-bye to your trading platform for the day. You can socialize online if you want and have fun because you're done and you're banked for the day and you don't have to sweat it. And you're concentrated. You're focused on your trading business or your trading serious hobby to be able to dial in and make money today and come in and dial in and make money tomorrow. The dial in is Saul's levels. The interaction between you and Saul is great. You know, one of the things you'll notice pretty quickly is that Saul is very interested in his levels and the action of price around his levels, but he doesn't sweat it, and he'll try to distract himself by talking about other things. While the market is moving, and when his levels come into play, he's focused like a laser beam. But in the meantime, he's distracting based on things that are happening. It could be economic releases coming up. It could be something interesting in the news, something market related, something unrelated. That's because he's been doing this for so long. He really is a pro at this, in my opinion anyway, where he can set his levels pretty close to the cash open and generally count on those levels pretty heavily. And then also note when you can't. Now, I'll give you a little bit of a trick here that seems like it's obvious, but it really isn't. Is that Saul sets his levels pretty close to the cash open. Right now it's 922. So by 928, he really has his level set. He gives them out to everybody here in audio. He has them posted in the chat area. And then the opening bell happens. When the opening bell happens, there's a rush of money that comes in depending on the day. It could be volatile, not volatile, but that's the point. At that moment in time, from 9:30 to 9:35 to maybe 9:40, there is a assessment that you need to do as a trader looking to make money today and daily, right? When the market's open, you've got to really take an assessment of what's happening based on volatility, momentum, follow through, the action of price. That's when you can witness what kind of a day this quite possibly could be for you and price action trading. There are days where you should sit on your hands and do nothing. There are days where you want to say, oh, wait, let me see how the first couple levels are doing. How's it behaving around the pivot? And then you can make a assessment. And really is an experience play, right? You've done this a number of times. You get a sense of where the market is coming into the open. You want to see how it is from a advantage to you or an advantageous opportunity for you to be able to wrestle the market for a short period of time, understanding what's happening on the other side of the bell. Now, Saul teaches that in his coaching. He also teaches you may know this already, and you don't have to learn it, but he also teaches you the concept of where to enter a trade. So if you've got your level and the market is moving, where do you actually step in price-wise so that you don't get stopped out as easily or as quickly, not as easily, but as quickly, or may not get stopped out at all based on the entry. And then you have the exit, and then you have the stop. And there is a nuance in there and a learned opportunity to be able to get into trades better, be able to handle your stop better, and not get shaken out as often based on, and what I say by shaken out is stopped out. Because naturally what happens in a market is that you get everybody else, you're not alone. There's a dynamic going on with a lot of traders out there. Just like if you take a moment, you visualize that the bell's coming up and there's a lot of people in the starting gate and they all have mentalized on the market, and now they're going to jump out of the gate. And what are they going to do? They're going to screw things up because they, A, don't know what they're doing, B, they're just reacting to what's happening and instead of having a disciplined plan of what's happening. And they're going to get stopped out, lose money. Some people might make a little money, and there's a action going on. You want to be able to assess that action and then step in based on a discipline and be able to step out based on that discipline, having banked money. And it's percentages, right? If you're going to do it a certain way and your percentages of success go up, all the better to you, and all the not better to all the other people. That's why we don't like standard. So, viva la difference to Sol's levels, and you'll pick up on that pretty quickly. But if you think of all the other levels that are out there that everybody sort of gets into the washing machine with because they don't know any better, they're being signaled to get into a trade. They're being signaled based on standardized levels. They're being signaled by crosses, time frames, all these things that they're mentalizing on, right? They're trying to make it better for themselves. And all that stuff is just putting them in the washing machine and spitting them out at losses. That's my opinion. A few people escape and might be able to make money on it, but that's a technique in itself to trade against the people that are all spinning around in the washing machine, getting all washed out. The opportunity here is not to be one of those because Sol's levels are different in most cases than those levels. Every once in a while, they might be close, or they might, what do they say? A blind squirrel finds a nut, maybe. Or the clock finds its time twice a day. But the point here is that Sol has a methodology, a discipline. He can teach you it. He can reinforce you in it. He's your trade along partner. He is actively scalping his own trading account. He is at risk, so he puts his money where his mouth is. Witness his levels, write them down, pay attention to what happens at those levels. Either agree that they're better levels than the standardized levels or not. It's up to you. And then it's about the trades. What am I going to do today? How am I going to execute a trade for my benefit and for my in general? You want to chip away and put money in your account. If you're interested in trading somebody else's money, you've got to pass a discipline, which I actually like. I like the idea of treating it as a business/discipline, whether you're with the Top Step trading somebody else's money or treating your same account as if you're trading somebody else's money and have a responsibility to that individual, where you're not just trading to trade, you're trading and you're accountable to somebody or something, so that you are developing, enhancing, and doing better based on your trade on a daily basis. So anyway, that's what we do every day. Welcome aboard. If you have any questions, don't hesitate to ask. Sal's going to be joining us shortly here. I'm going to blend into the background. If you have any questions, don't hesitate to ask. I'll put the menu plan out now again so that you have and know what the menus are. The wheel of opportunity.
All right, good morning, everybody.
Remember, it's Zoom, eminitradealong.com, eminitradealong.com. Join us in Zoom Live. Ask questions, interact, be part of it. Hey, Stephen. Sam. Hey, Robert. Rob, Philip.
Good morning, everyone. All right. Yes, everyone.
Is all talking and am I missing it?
Can you hear me all right? Yes, no. Everybody hear me all right?
Can everybody hear me all right? All right. Can you guys hear me okay? Okay, good. All right. Let's give you our levels for this morning. Our pivot this morning is 43.59, 43.59. Support below at 50, 43, 35, 28, and 21. Resistance on the upside at 67, 74, 84, 90, and 44 even. We're trading the SEP contract this morning. Okay, the SEP contract. Pivot again, 43.59. Resistance on the upside at 67, 74, 84, 90, and 44 even. Support below at 50, 43, 35, 28, and 21. All right. Welcome to some of the new folks that are here. We are trading mini S&Ps. We're looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action opportunities that might occur. Combination of both of those gives us our setups, and we probably average about 4-5 trades a day, and the keyword there is average. The June contract is trading at 43.13. We're trading this up. So you have the June up. That is exactly where it's trading at right now, the June contract. All right, so just kind of, so maybe you have to figure out how to switch it over to the subcontract in your properties, I guess. I'm sure it's, you know, obviously, I had trouble with mine, but I had my IT guy help me out there. Tom, thanks. So it's always good to have an IT guy and phone call away. Sometimes it works faster than others. That's all. All right, you got it. Okay, good. So we're just kind of hanging here. You can see the market is kind of range bound here. It has been for overnight here for a little bit. The last week, as far as numbers were concerned, very, very quiet, dull kind of situation. We did uptick a little bit here. Just a touch. We got above, well, we're just trading in the 40. Well, you got to remember, this is the subcontract. So, June is trading just above 4,300. And we're just kind of hanging here. So again, we're looking for opportunities to scalp the market based on the levels we gave out. There's support and resistance. We don't believe markets go straight up or straight down. Consequently, we're looking for those opportunities that gives us scalping opportunities, ebbs and flows we're trying to take advantage of. And we also have to be patient and wait for those opportunities, especially now that the VIX is probably at a solid 13 handle. VIX is the volatility index, which again also tells us how much we are going to trade or not. Basically, it's just volume at the 14 handle. Wow, it's 1472 actually. That's pretty impressive. We were close to 13, I guess. I don't know how we got up more. I don't know how we got more volatility. This week, though, we do have some numbers coming out. We have, we'll repeat the levels in the chat in just a minute. We had some, well, we do have the Fed coming out with its decision on interest rates this week. So that should be interesting somewhat. Probably, maybe, I guess the only thing that they'll be looking at there is the what the statement's going to say. There, everybody's expecting them to not do much this time as far as raising rates. I'll repeat the levels again. Our pivot this morning is 43.59. 43.59. Support down at 50. 43. 35. 28. 21. Resistance on the upside at 67. 74, and there they are in the chat for you. 84, 90, and 44 even. All right, so as we are just kind of going back and forth. So let's see here. It's a huge week for setting up for macroeconomic front with the Federal Reserve and the central bank, European Central Bank, both scheduled to decide on interest rates and update on monetary policy amid persistent inflation as the market slowly trickles down here a little bit. Support down at the 50 area. The consensus view is that the ECB will lift interest rates by a quarter point and the Federal Reserve will stand pat. The big meeting arrives with a premium optimism ramping up early part of June. The recent rally has seen 10 of the 11 S&P sectors push higher. However, a surprise from the central bank or nail-biting indices, CPI and PPI, could cool off the bullish sentiment once again. And CPI is coming out. And the CPI is coming out, I think, on Wednesday. No problem there, Don. You have to apologize. As we come down here to our 50 area, or maybe let's see if it does get down there or not. All right. Again, we kind of like to scale in around our area there. We feel that we're not going to be perfect as far as getting any levels exactly right, so we kind of scale around it. And it depends how you scale around it. Depends on your risk tolerance, how far away and around that level you want to, and how many contracts you trade. All of those things are part of your risk tolerance and how you want to, or how much risk you're able to take. And everybody here does that on everybody's their own. Everybody here has their own levels of risk taking. You have to get to that area that you're comfortable with. Well, we got down to 52 and change there, and then popped it right back up. That's kind of unfortunate, but it is what it is. We're not going, we have levels up there, and we believe that there's a whole bunch of support in that area down there. But it just kind of, I try to take a safer area and try to deal with that. All right. We come right back up here to our pivot area. Also our blue band up here if you're a little aggressive. Again, if you're looking for opportunities. a little bit of an opportunity right here if you're a little aggressive. Again, everybody trades differently. Just kind of hanging back up here at our pivot. Upside resistance would be at the 67 area. Hitting those stops, as you can see, they kind of got above the blue band there and come right back down here to 59. Very, very choppy little trade right now. Just kind of hanging around our pivot, kind of going nowhere fast. Yeah, they had to just pop it there above, but got up to 61.75 there and come back down. Very, very choppy little trade. I mean, if you did take the pivot there, you're depending on how you had your stops in there or not. Some people have obviously a finger stop, which gives you a little bit more leeway, but also increases the risk, especially if they run away with it. But and or a mechanical stop. Those are two ways of having stops in there. So if you did one or the other, maybe obviously you got stopped out if you took the 59 area and put a stop in there. And if you did 3 points though, you did okay. So that was against the 59 rotation to the off of that low, and it gives us a little bit of a rotation back down here. Obviously, 3 points did not get stopped out. All right, getting choppy here. Again, staying in the same range though, so we're not really going that far. All right, there's a CPI. It's coming out. Let me see here. I think on Wednesday we have the Fed coming out with their stuff also this week. On I think they are Tuesday and Wednesday. I know they're Tuesday and Wednesday. The CPI could be on Thursday. I don't know if they're going to keep them, file them all at one time. I read it someplace, but I can't find where I read it. There is no economic reports coming out this morning. not even anything to talk about this morning. It's how bad it is. Well, it is what it is. Again, we have to be patient and wait. We've been kind of talking that story for a while now, only because it is what it is. And the market, these rally markets are tough to trade, but also they don't create much volatility when we're trading. And when the markets trade to the downside, they seem to ignite a lot of volatility. There's a lot of ebbs and flows. There's more opportunity for us. When the markets do these slower little rallies here, they kind of not really trade that much, and we have to also be patient along with it. Bond market, though, kind of interesting, kind of breaking down here a little bit. We're just kind of range bound here a bit. 50 is our support area on the downside. All right, just kind of slowly drifting around here, going back up here to the pivot area. Just kind of patience and have to be patient.